So as mentioned, I'm John Halloran, CTO of Texture Capital. Texture is a FINRA-approved broker-dealer. We are approved to do both issuance and secondary trading of private unregistered securities using blockchain as a primary accounting method. I've been working in financial services for over 20 years, and I say things like that at dinner tables and people's eyes just glaze over. So the point of all of that is, I think everyone who's been here for yesterday, I think we have a shared vision that blockchain technology has is going to help us all to make the fundraising process and the secondary trading process much more efficient than it currently is and much more accessible to more builders as well as investors. And so a lot of talk this morning from Tom as well as from the Row folks just now about what we're trying to do is get people to the moon and get them back. We want to get companies to get built. We want to get that requires capital, so we want to get people to invest more easily, and we want to get exits, get return capital to our investors without necessarily having to wait all the time that it currently takes to do an IPO or to do some type of M&A transaction. So we are here to help with both of those things. There's been a lot of talk about how blockchain can help all of this and the magic that it's going to create. I think there's a lot of discussion around, sometimes things get confused between what's possible in the future and what's possible now. So what I want to walk you guys through is like what's possible on the Texture platform today. I'll be showing you what we can do, and also what are the steps, what are the points in the process at which blockchain is helping us, and how does that make things better than they are today. Can you just block me out for a second and while I switch this? Great. Yeah, so you could flip it back on. Right, sorry. Okay, so this is our public site. These are some of the offerings that we have up currently that you're able to invest in. Disclosure, I'm not offering any securities for sale. This is not any sort of solicitation to invest. However, of course, if you do want to work with us, you want to talk to us, I'll be here today, and as well as my partner Richard Johnson. We'd be really interested to talk to you guys. But what I want to do now is just kind of show you a demo version of our system. Again, talk about how does blockchain help, what is possible to do today on our system. So what I've done here is I've logged into our system as an investor. This is an investor who actually holds securities. And that's where the first sort of part of the magic is. So we can see that this investor here has these three different positions, right? If any of you have had the pleasure of trying to sell unregistered security, the first step in the process is to, and if you haven't met someone at a bar that wants to buy it off of you and you need a broker to help you out, first step in the process is to prove to that broker that you actually own the securities. So that would involve you digging through your email, getting your last statement from the issuer, sending it over to the broker then calling whoever is serving as transfer agent to confirm that this individual still owns those securities. Because we deal with securities that are represented on the blockchain, we shortcut that process, right? You log in, we know what your wallet address is, we know what securities you hold, they're still in your address, therefore you are able to sell them. We're putting up if you enter an order to sell your securities, we're putting that up now. Huge, huge improvement from the blockchain right there, okay? And how do we get there, right? How do we get there? So a lot of talk about KYC and accreditation of investors, all that sort of stuff. As a broker-dealer, Texture Capital, we can take care of all that for the issuer. There were some, you did hear from one of the speakers yesterday that, using a vendor for KYC doesn't exclude you from the obligations, et cetera, and that's all true. If you work with a broker-dealer, we handle the KYC process, and you can rely on our representations. If something goes wrong down the road, God forbid, which it wouldn't if you work with us, then the SEC gets to ask us the questions and not you, the issuer. So we kind of take care of that for you. In addition, whenever investments are made, all this information that was provided to us when the customer signed up is going to be tagged to the wallet that the securities end up in. So the issuer is going to have that good provenance of who is this investor, what do they, where do they come from, who rep them, how do I contact them today? I have the great joy of being in the midst of a sale of private securities. In order to do that, I just moved. I have to actually go to a notary, get a notarized statement that I changed my address in order to get my check. Good times. So again, we're kind of smoothing out that process for you guys right there. And then in terms of the how we work with issuers on a primary offering, this is just kind of an example of what you might be able to put together. This is similar to what you might see on a other kind of crowdfunding sites. We're gonna, as the Row folks mentioned, there's a lot of, it's extremely important what you put in front of investors when you're selling them securities, as Brian Armstrong seems to have learned fairly recently. So we're gonna work with you to put together this presentation that investors are gonna have exposure to all the appropriate information, your audited financials down here, any information about previous financings you did, previous issuances, the offering memorandum, pitch deck, subscription agreement, and due diligence reports. You can also put up other information that you might want. That's more marketing kinds of material, stuff that you might work with Row to create videos that support your offering. Our platform is tracking everyone who gets hold of those documents, when they were delivered to them. In the unlikely event that you have to update some document that was presented to some investors before the deal closes, we can tell you immediately who downloaded it, who do we have to send the new version to, and of course we'll track all that for you as well. An investor wants to invest, let's just say this guy wants to put in 25 grand over to DocuSign, where the documents will be prepared for them. The information that showed up on your profile is what's going to be embedded into the DocuSign document. I'm sure you guys are familiar with the joys of DocuSign. As you see, the information for my investor is all filled out here. We go through the normal signing process, and then as soon as you complete this, the issuer is going to get an email with alerting them to sign off on the to sign off on their side of the document so that it can be completed. Keep the issuance process organized. When the issuer is ready to issue their securities through in some cases through the Vertalo platform, all this information that we collected is going to be bundled up for them. It's going to be tagged to the wallet that your securities are going to land in, and so all that provenance and all that documentation is going to be nicely organized for the issuer down the road, 5 years later, when you want to figure out, like, when did this guy come into my deal? And that's going to set you up for secondary liquidity. Again, this is one of the big promises that we've been talking about at this conference, that blockchain is going to simplify the secondary trading process for these unregistered securities. As a result, you're going to have an easier time raising capital. Investors who understand that there is a way to make their investment liquid prior to your doing an IPO or prior to your doing some big acquisition are going to give you, that's going to lower your cost of capital. They're going to give you a better valuation. So with all that said, I think it's important to understand that we can't invent liquidity. You still need a buyer and you still need a seller. Citadel's not playing in this market. It's not like Apple, 100,000 shares deep. You're going to need to find you're going to need to put these transactions together. It's not going to be, a continuous market. We can certainly implement a continuous market for these securities. Given our background at Texture, we've been in the listed markets for many years, focusing largely in illiquid securities. So what we've done is we've put together an auction model for the secondary trading of these securities, which I'd like to walk you guys through now. Do you mind blacking me out while I switch this back over? Thanks. And then, yeah, if you could flip it back, that'd be great. Thanks. So this is kind of our the way that our auction model works. What we have implemented is called a call auction. A call auction is, the basic logic of it is you set a point in time, everyone has the opportunity to send their orders in, send their orders in prior to that time. Even if orders overlap, there's a buyer with a higher price than the seller, they're not going to trade until the time that's been set in order to allow the maximum amount of liquidity to come into the system. What that does is it gives us an opportunity to create the best informed price and maximal quantity for the trade that's going to go off. Okay? All the buys and sells are going to be matched off at a single price. So again, you don't want to get into a situation with your investors where somebody trades and then a day later somebody trades 10% down just because that seller that buyer wasn't there when they showed up. You want everyone to get a better price, a more fair price. You don't want to run into issues with your valuation statements as well. So we're not. It's a little bit complicated, but we're not inventing anything new here. And again, like we said, it's going to optimize price and quantity discovery, reduce information leakage. This is not a public. You're not posting a public bid or offer. Everyone knows that at X point in time, they need to put their trading interest in. You're going to put in an order that's up or down, whatever you're comfortable with, and you'll trade if something goes off within your range. It's also pretty flexible. We can run this at different times for different securities. The issuer can be in charge of when the trades go off. Last thing, there's a lot of when we get into secondary trading of, in particular, real estate assets or fund structures, there's all kinds of difficulty that comes into play around K1s. If you run one of these auctions just once a month, once a quarter, first of all, you're dramatically increasing the amount of liquidity that your investors have, but you're not creating that nightmare of issuing K1s for everyone that came in 1 or 2 days apart. So this is just kind of representing the scenario that might occur. So we got buy orders in blue, sell orders in red. We see that the orders that are highlighted in green, those are orders where you've got the green area represents the overlap, an area where you have sellers and buyers with compatible prices. And then each line is indicating what the quantity would be that trades at that given price. You got 1,000 shares that would go off at $10, 3,000 shares at $9.80, 2,500 shares at $9.60, and so we choose the maximal quantity. That's really the best informed price because there's 3,000 shares of trading interest in that, and that's what we're gonna go off at. Given that there's more buy interest than sell interest, or sorry, more sell interest than buy interest, we're going to allocate pro rata to those sellers so that they're going to get the same portion of. They're going to get the same portion of the executed quantity that their orders represented of the total interest. Happy to explain that in more detail when Nathan's not trying to get me off the stage. But the important, there are a bunch of other considerations, right? If you got multiple prices that achieve the same quantity, we'll average those. If there is overlapping residual interest, we'll run that auction again, so you could get multiple prices out of the same auction event. And we can respect minimum acceptable quantities and other things where an issuer might not want really small lot sizes onto their cap table, or an investor might not want to be left with 10 shares or something along those lines. So a lot of flexibility in how we can help issuers set that up. But we do think that this is a superior model for the types of securities that we're talking about here at the conference to achieve secondary liquidity. And as I mentioned, I'm here the rest of the day. Co-founder Richard Johnson is here as well. We'd love to talk to you guys about the details and hope that we might be able to work with any of you guys. Any questions? Thanks all.